Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. Go ahead and do yourself a favor and come join the family by hitting the like, subscribe, and the notification bell. Call myself getting a little R&R. But we're gonna go to the charts and see what's going on with the overall stock market and the crypto mining companies. And let's sit here at the computer. So let's see where there's opportunity, and the market is still in a bull market. The bulls have taken over. Let me do this. The bulls have taken over, and the market still seems to be moving up. But as I've been stating, I am still mostly cash, believe it or not. Even though I never stopped DCAing, I am still mostly cash. Just in case. Now, for those of you that are all in, you do you. Anything I say is not a suggestion to buy, hold, or sell. But for me, I still think the market is still too frothy. But if you have been bearish for 2023, you have left a ton of money on the table. Let's take a look. All right, good people. Hey, let's take a look right here, right? So here's what I want to show you guys. So we got Tesla. Right? Tesla's been trending down. All right. Tesla's just been trending down year to date, as we can see. Last 6 months, we're red, especially the last month, we're red. Now, why am I bringing up Tesla? Because Tesla is a buy for me. Now, anything I say is not a suggestion for you to buy, hold, or sell. I'm just showing you guys what I'm doing. Why is Tesla a buy for you? Now, I'm not buying big chunks of Tesla. I'm simply dollar cost averaging down as it falls. And you guys know that I have been buying Tesla for years now, dollar cost averaging. But in ranges like this, I dollar cost average heavier as it trends down, and it will soon find a reversal. I believe that when Tesla gets down to 194, 195-ish, that's when I will go in heavier in Tesla. And if it gets down into the 180 range, then I'm going to load up at that point. And I'm not going to worry about the fluctuation. We know the love affair with the EVs have waxed cold, right? We don't have the infrastructure for it and all of that, but Tesla will overcome that. Believe it or not, it will overcome. It will be back. Tesla one day will be twice as much as it's worth right now. Right? They're going to figure this thing out. Trust me. And now's the time to buy it while it's beat down. And I'm just pointing out what I'm doing. You do what's best for you. If you don't have patience, then it's just not a play for you. But I have plenty of patience because I realize how these things go. Now, the other hand, we got stock like Nvidia. That's at the top of a range. Okay, look at this. 212% over the last year. And if you go to the top of 2023 till now, it's up even more. Now, I'm up over 200% because I bought a lot in 2023. And you guys know I've been dollar cost averaging for years in Nvidia. But what I do is now that Nvidia is at the top of the range, I lowered the amount of my dollar cost average, meaning I am buying weekly at a lesser amount while it's at the top of the range. And then when it cools off and goes back down, hey, we just had a $100 bump in the last couple of weeks, good people, all right? And so even year to date, and this year just started, we're up 24%, right? And so it's a little frothy just for right now. But you and I know one day Nvidia is going to be an $800 stock. One day it's going to be a $1,000 stock. So these are long-term plays that I'm positioning myself for. So I'm going to use a stock like Meta for an example. You guys remember when Meta was in love with the metaverse? They put billions into the metaverse. And, that's not why we came to Facebook, right? We came there so we could see grandma's pictures, so we can post our perfect lives and all of that, right? That's why we got into Meta, not for it to be, that's why we got into Facebook. not to be wearing a headset and all of that, right? So he went crazy with all of that, and the stock plummeted. It plummeted over 75%, right? Remember when he had a come to Jesus meeting down here and he says, okay, I hear you guys are right, and blah, 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 blah. What happened? It reversed. But it didn't just reverse and come back up 74%. At the bottom, if you bought it at the bottom, you are up actually 305%, 321%. You guys see that? Because it's not what it looks like. And so now the people that listen to Warren Buffett, that were brave when others are fearful, right? I just continued to dollar cost average, and I did buy up a few big chunks. When you guys remember when it went under $200, we started buying, right? But the people that were the bravest when others were in fear are the ones that, you know, really won. The people that bought down here when it was $115, they're up over 230%. That's what we want to do long term. I'm just talking about long term plays. Now, in closing, I want to show you guys something about these crypto miners. Now, we didn't have a spot ETF back then, right? So that has changed everything. We did not have a spot Bitcoin ETF. But with these Bitcoin miners, for those of you that are in it, there was about a 75%, let's just call it 75%. There was a 75% drawdown, right, in the crypto mining companies. Now, when did this happen? 3 months before the halving. So what happens was there was a drawdown, and then it traded sideways for a couple of months. And then boom, here comes the halving in May. And then after that, all right, and I got to continue to show you guys this, all right, because when it happens, I'm not going to say I told you so. I'm just going to say I stuck to my plan. That's all. After the halving, even though it seems like a bloodbath right now with these crypto miners, after the halving, it went from like 40 cent up to, and this is Mara, it went from 40 cent. It just skyrocketed. It absolutely skyrocketed all the way up here, good people. That's insane. Can we bring that down? Yes. That's, you know, it went up to, I believe it went to the 80s, okay? Mara did. Hey, so there we go. There you have it. Listen, I want to talk about something that I've noticed that people do, and it's the reverse. It is the absolute reverse of what Warren Buffett taught us. And you know, those of you guys that know Warren Buffett, he talked about being fearful when others are greedy and being greedy when others are fearful. A lot of us, and I've noticed it with the class, what's crazy is more people download the class when the market is moving up. More people download the, you know, Moo. This is Moo Monday. Make sure you can get up to 8% now. And a lot of people download those things when the market is moving up, right? But then when the market is cooling off, people get fearful and they hold their money, right? So look at stock like Nvidia over the last 2 years. Look at stock like Meta over the last 2 years. When they were going lower, no one wanted to buy it, right? But now that they're going higher, everyone wants to chase. And that's the polar opposite of what you should be doing. As a matter of fact, when and if the market, not if, but when the market does have a big cool off or does quote unquote tank, that's the time you guys need to be studying. That's the time when you need to be leaning in and not running from. Follow? So Warren Buffett's principles and his rules still stand, and I live by them. When others are fearful, that's when you're greedy, okay? And when others are greedy, that's when you're fearful. So lean into the red when the market starts trading down. Now, for those of you that are dollar cost averaging, this is what I'm doing. I'm doing it with the Bitcoin miners. I'm doing it even with big tech, right? When they go down, like now, Tesla has been in a downgrade. It's been going down, 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 right? As Tesla go down, I buy more as it goes down, and I buy less as it goes up. My Nvidia, I'm still DCAing, right? But I'm not DCAing in big chunks because it's at the top of a range, right? But when it goes down, if it loses $100 per share, that's when I'm gonna be buying more. Follow? And so we have to lean in. Remember, Warren Buffett said it best. When others are fearful, that's the time to be greedy. Don't get it twisted, okay? So let's stay focused on the principles and you will perform better. A lot of us are emotional traders. Take your emotions out of it. Emotions is going to cost you more than anything, right? We have to have a plan and we have to stick to our plan, even when it gets difficult. And I will tell you, I have made more money when I stuck to my disciplines when it was difficult, right? Like if you say you're going to sell a stock and it continues to run, it's difficult to stick to your discipline and sell it because you go, oh no, it's going to keep running. And then next thing you know, that bull turns around and turns into a bear and comes back and mows you down or maul you down, right? And so we don't want to get caught in that vortex. We don't want to be led by our emotions. We are going to stick to our principles, all right? Listen, it is Moo Moo Monday. Go ahead and get, up to, I believe it's 15 free stock. You guys look at it and read it. I mean, 8%, up to 8% on your uninvested money, better than any bank. So just open up an account. I would put $1,000 in, but a minimum of $100 in that Moo Moo account. Get it funded and start earning interest on your uninvested money even. You can't beat that with a baseball bat. And then, of course, the class, Stock Up You. Buy it now, study, and learn, and then earn for the rest of your life. All right, we'll see you tomorrow. Live, love, laugh, and learn.